Welcome to the Organized Investor PodCLASS with Jerry Goodman and Megan Hubbard from Tennessee Wealth Management. Think of these pod classes as a college of knowledge, and the curriculum is an inside look at how we work with our clients to organize their investments, their retirement, and their affairs. Our process is certainly not the only approach, but it has served our clients well. Listening may materially improve your life as well, but for that to happen, it also takes an open mind, an interest to learn, and your trust in what we're sharing. We focus only on what is relevant and will explain things several times in different ways over multiple classes to ensure you understand their importance. We suggest you subscribe so you'll receive reminders about the next class. And with the tools and information on our website, theorganizedinvestor.com, you can start getting organized right now.
Hi, listeners. Thanks for joining us today for Unlucky PodClass number 13. And what a coincidence, because this is the lucky 7th PodClass in a series about how to organize your investments. When we started creating these PodClasses, we didn't really know how many episodes it would take to cover everything we wanted to share. We made the educated guess that it would probably be about 25 episodes, and that would probably cover what we want to talk about. But the reality is the world is always changing and we're always learning new things as we create these, which makes this kind of a work in progress, if you will. This is our 13th PodClass, which means we're at the halfway point to the 25th episode. So we decided to take a brief intermission to remind you why we've created these episodes and why we cover what we do, and also who can benefit from all of this.
And let us mention, Megan, that maybe they want to pop some popcorn since this is the intermission episode.
That is true. Everything's better when you're eating popcorn,
Right.
even listening to us talk.
That's true.
Well,
Maybe an adult beverage might also be in the works.
yes, people could play a drinking game while listening to us.
Yeah.
That might not be a good idea. They'll end up
Probably not.
on the floor. All right. Well, I'm Megan Hubbard, and I'm here along with my dad, Jerry Goodman, in front of our microphones. And students, whoever you are and whatever you're sitting in front of, thanks for being brave enough to join us today. You can think of us as Megan and Dad. I'm a former first grade teacher at Christian Academy of Knoxville, and my dad actually remembers his principal, who was Mr. Nichols at Moreland Heights Elementary in South Knoxville. What was your fondest memory of Mr. Nichols?
We didn't see Mr. Nichols a great deal, although he would show up on like a class photo day, and he and our teacher would be in the class photo with us. So he was there for that. And nice fellow.
Did you ever have to go to Mr. Nichols' office? Because I feel like you might have a time or two.
Well, I don't think I would. I didn't start getting in trouble till later. So this was like the first through the fourth grade. Yeah, I deferred all that till I was junior high school.
Smart.
Yeah. Plan ahead.
Yeah, you don't want to live an entire life of bad
crime.
Behavior, right?
Yeah. crime at an early age.
Oh, man. All right. Well, I do have a master's degree in curriculum and instruction, and Dad has 43 years of experiences, stories, and he would say, most importantly, jokes, some of which I've had to hear 43 times.
And Megan, that actually, if you think about the math on that, that's not that bad. I'm only repeating the jokes once per year. So it could be worse. Okay?
True, since you've been doing this 43 years and I'm about to turn 43. So
you've probably heard them enough. You can actually start to tell them. That's when it becomes very important.
Well, wanting to tell them and telling them are two different. Like I think I'm going to just defer to you on these. So
well, thanks. It'll be my fault. So let us get started, as Megan mentioned, with our little halfway point intermission with you and your popcorn with maybe some salt on it. And we're going to give you a little update on what it is we're doing in our grand plan here. If you haven't noticed, if you've listened to these before, you might kind of figure out these are sort of divided into 3 different topics: organizing your investments, organizing your retirement, and organizing your affairs. Not your extramarital affairs, mind you, that's another podcast episode, but you're organizing your estate kind of affairs. So we covered retirement planning, organizing your retirement in PodClass number 3. And whether you're planning to retire like in the near future, or maybe you're already retired and just want to stay that way, we have a planning tool called Envision that may offer you some peace of mind about your situation. And Megan, I don't know if you realize this or not, there's actually a line of toilet paper named Envision. Isn't that special?
I did not know that. I guess that also could provide you some peace of mind in any
Mhm.
situations that you might get into.
Well, that's true. That's true. Toilet paper you can depend on.
Oh boy. Well, we're not going to talk about toilet paper. We are going to actually talk about the Envision program. And with this program, we can take your age and your investments and we analyze it in a couple of different ways. One way is to take your retirement goals, such as when you want to retire and how much you do need in your retirement income, and give you the probability of a successful retirement based on those goals. Another way is to take your information and then calculate backwards to find some reasonable retirement options that also have a good probability of a successful retirement. And that might seem a little daunting, but honestly, it's probably easier than having to say your ABCs backwards
That's true.
in like a
That-
sobriety test. Not that I've had to do that before, but I feel like
yeah.
I don't think I could do that sober.
Or start at 100 and count backwards by 7.
There's no
That's
way.
well, my sister can, but then she's too smart for her own good. So, in simple terms, Envision, we talk about it as toilet paper, but we're talking about the planning tool now. Envision is, we're going to call it, a very sophisticated what if calculator. And what it does, it allows us to, again, take your information, as Megan described, along with your goals, your objectives, what you want to have happen. And we're going to give you a probability, or Envision is going to give you a probability of a successful retirement. For a number of different scenarios, like what if you retire now, wait 3 years, retire 2 years ago, whatever it might be. And we have information about Envision on the retirement page of our website, which we'll repeat 147 times on this podcast. The website is theorganizedinvestor.com.
So let's talk about estate planning. Estate planning was actually covered in pod classes 4, 5, and 6. And in it, we explain how to save about $1,000 by working with a local attorney for a flat fee. We also talk about protecting your family from predators, creditors, and divorce. I feel like I need to say it like that because it
Yeah.
seems ominous.
It kind of rolls off your tongue.
It does. We even explain the massive amount of misinformation designed to convince you to create a revocable living trust versus just going with a will. Now, as an simple example here, we have a very detailed explanation in podcast number 6 about having your home inside a revocable living trust, meaning that your family member is going to have to wait as long as a year to sell it after your passing. So think about that. Your family member dies, their house is in a revocable living trust. You're thinking, okay, I'm going to sell this, get my money. That is not how it works. And nobody probably has ever told you that.
I doubt it. And this is because what Megan's describing to you is because there are creditor protection laws in every state. So it may be quicker to actually to probate an estate rather than trying to avoid the probate within a trust and go through the revocable living trust aspect. Now, a major part of the sales pitch that you're going to hear from people is that this more expensive revocable living trust will always help you to avoid probate, which, maybe it will, maybe it won't. But they're never going to mention the fact that probate may actually be quicker, maybe less expensive. It may in fact be less work if you look at it just in totality.
So pod classes 4, 5, and in particular number 6 is a very detailed explanation that should be heard by anyone with plans to address estate planning. And that's some of what we've covered about organizing your retirement and your estate.
So I'll make one final comment before we jump off estate planning is for those of you who listen to us and think, well, you're financial planners. What do you know about this? Let me ask you to take a listen to PodClass 6 and just see if you don't realize that we do know what we're talking about and we can be very helpful to you in a number of different ways as far as that's concerned. So, plus probably help you save $1,000, if you need to do this, as far as getting these things in order. Now, in terms of the third one, we talked about organizing your affairs, organizing your retirement. This one, the third one, is organizing your investments. And we have covered this in depth from episode 7, 8, 9, 10, 11, 12, and now we're up to 13. And the reason for all this extra focus on investments is because this is the area where you can actually improve your financial future, okay? You make a big difference. So sure, helping you get your affairs in order is important. You're going to save $1,000, but that $1,000, it's a one-time event. Once you get it completed, You may never touch that issue, talk about that issue for years, maybe never again. On the other hand, your investments, they have the potential for benefiting you many multiples of that $1,000, okay? Which is also why we refer to your portfolio, we've talked about this many times, is a lottery ticket that may actually materially improve your long-term financial future.
So we've also repeatedly shared the example of someone with $1 million portfolio. Now, if they can improve their overall performance by 2% per year, that is equivalent to $20,000 per year, or $400,000 if you extrapolate that out over the next 20 years. So, from a purely financial perspective, this is a massively more important number than trying to save $1,000 on your estate planning documents. I would hope that everyone would agree with that, right? I'd rather have $20,000 versus
Per,
a
per
thousand.
year. Yeah, per
Right.
year, per year.
Right. So again, the reason we spend more time on your investments is because that's where the real money is.
So we have a process to materially improve someone's financial future, and it involves a variety of different things, such as, let's start off with this, focusing on individual stocks with a history of raising their dividends because they have much better performance than a lot of other parts in the stock market, okay? For example, we focus on a Wells Fargo research list. It's called DSIP, DSIP, which stands for, it's a mouthful, Diversified Stock Income Plan, which is obviously why we break it down and shorten it to DSIP. And this list recommends these types of companies who increase their dividends, these companies who have a dividend growth strategy. And the list has an impressive track record of 30 years, total track record, 12% a year. It's pretty amazing. Now, if you're wondering, is that good? Keep in mind that 12% per year since 1993, that's about 20% more than the S&P has done over that same time period. Now, we also suggest that you avoid advisory accounts that are invested in mutual funds. Why is that? It's because they're normally going to have mediocre performance, which is because the mutual fund fees that are buried inside of those accounts, those types of plans, and because there's literally too much diversification. It's what we would call diversification.
Dun dun dun.
Oh, that's our sound effect for diversification.
So, to add some legitimacy to what we're doing here, we've shared the historical track record of our advisory accounts through January of 2024. Here's a single number that is easy to remember. So, for the 84 advisory accounts that we manage that have a track record covering at least 5 years, the net annual rate of return was 14.06%. Now, to be clear, net annual return is after any type of fee or expense that has been deducted, okay? Now, it's what our clients actually made, and that is 14.06%, which is equivalent to a 92% increase in value. So compare what our clients have experienced to your own returns. And if you don't know what your 5-year track record is, here's a simple question. Did it almost double in value over the last 5 years?
So this is why we focus on and pay a lot of attention to helping people organize their investments, because it can materially improve their financial future. This is our primary mission. Over the years, we've seen a lot of investment options, and some of these things, they've worked a whole lot for a short time. Some have worked a little bit for a long time. Some haven't worked hardly any at all for any time, okay? So as a financial advisor, it's easy to become very skeptical about new ideas. And when we actually learned about this DSIP list, this Diversified Stock Income Plan from Wells Fargo, it literally took us like 6 months to finally become confident enough that this was different. This was something that was special, something that really was appropriate for a lot of people. And because it took so long for us to embrace this strategy, we're assuming it's probably going to take time for everybody else as well. That's why we keep harping on this.
So, we're going to keep explaining this until you either believe us or you just quit listening, which hopefully I just didn't give you an idea to abort the podcast and just
Don't leave us.
stop listening to us. But either way, because until one of these two things happens, everything else we could talk about, it really doesn't matter. Okay. So, exactly who are these pod classes designed for? So, in other words, who needs to be listening to these pod classes? Well, as you might expect, we're creating these pod classes for someone who is not yet a client. That's what you're probably thinking, right? Well, actually, it might come to a surprise to you, but we are actually creating some of these pod classes primarily for our clients. And if you're wondering, why on earth would you be creating these pod classes for your clients? Don't they know what you're doing? Well, a little more specifically, we would say, it's really for our clients' families. Maybe not our clients per se, because they do have a good idea of what we're doing. Maybe not fully, because I think they trust us and they're like, do what you do, but it's really for their families.
Hopefully, you're enjoying this Organized Investor PodCLASS with Megan Hubbard, the Dean of our College of Knowledge, and Jerry Goodman, her CFP dad. Check out our class notes to find out how to reach us and subscribe to our pod classes to get started.
And they're not maybe in a position to explain all that, but they have a general idea. So we're going to start off talking about our clients, and we're going to get to all of the non-clients in a few minutes, okay? But what better way to start off all of this with a little story? So let's go back to pod class number 3. And we talked about a client that, if you've heard this, you'll recognize the name. Her name is Sally. Sally had become a client of ours because her father had passed away probably 25 years ago. It's a long time. Really nice person. And someone passing away, this is how a lot of new client advisor kind of relationships, how they start. Now, another common way is, let's say the advisor retires or leaves the firm or something happens, and so the client is reassigned to somebody new. So for both of those scenarios, either someone's passed away or the advisor is retired, either way, many times these client relationships, they're starting from scratch, from the very beginning.
And if you were in that situation, you probably don't know the advisor and they may not know much about you. So it can take a while to get acquainted, and usually it will be a good fit, but not always. So educating the family of our clients not only makes for an easier transition when they inherit those assets and when they become the beneficiary, but many of their family members can benefit from the same information right now. Maybe they need to materially improve their financial future or get their affairs in order now instead of sometime down the road. And so we can help with that, even if they haven't inherited something from their family members at this point.
Now, fortunately for Sally, her dad, for some crazy reason, her dad actually had very nice things to say about us, and we appreciate that. And she's been a client of ours for years, probably a couple of decades. Now, having some basis of trust and understanding about your parents' financial advisor can make it much easier when the transition comes around, when the family member actually becomes a beneficiary. And that new beneficiary, they may know the advisor by name, but they really may not know much about what they do or how they've been working with their parents, which in this case, with Sally, sometimes it's been going on for decades that we've been helping her.
The fact that we have some very long-term client relationships, some of which go back over 40 years, that doesn't mean every client is in a position to explain to their family exactly what we do or how we do it or why we even do it. In fact, sometimes it's not that easy for us to even explain what we do.
Exactly. Yeah, I agree. Like, what do we do some days?
Well, we eat a lot of snacks around here. We do
Well,
that, but
that's true. So we're snack friendly.
some of our clients have a more detailed understanding, though, of what we're doing and what we're trying to help them with. But most of them, they either don't care or, they don't feel the need to know because they trust us to handle things, like I said earlier. So, in other words, they want things to be taken care of. But most people don't want to know so much that they could actually explain it to someone.
So with that said, these pod classes, basically they're a way for their family to understand some of the many things we do and why we do them certain ways. So this is just kind of another example of, let's call it, succession planning for our clients. For example, our investment focus, it is on higher quality companies that have a dividend growth strategy. In other words, a history of raising their dividends. And this DSIP list that we talked about that has a 30-year track record, it's 12% a year, phenomenal performance. And our clients they're aware of some of this, but they don't have to explain all of this to their family because we're explaining it to them, like on podcast 7 through 12 so far. And there's going to be others as well that explain what we're doing and why.
And they don't have to explain that we can probably save someone about $1,000 on their estate planning documents because we covered all of that in pod classes 4, 5, and 6. And they don't have to explain to their family that we have access to a financial planning tool called Envision that may give them some peace of mind about retirement. we actually covered that in podcast number 3. And that was the first time we had told you about Sally in that episode. So if you haven't heard Sally's story yet, Sally didn't just dislike her job at the post office. She actually hated it with capital letters. And she had some health issues. So she really wanted to retire.
So we ran an envision summary for Sally. And what this did, it gave her the confidence that she's basically going to be okay during retirement, based upon her pension, Social Security, and the IRA that we've been managing for her. Now, Sally, she's one of these examples, like of many clients we've got who we've been able to materially improve. It's not only their financial life for the client, but it also ends up improving the life of the family who's ultimately going to inherit some of these assets. Because her father, he was nice enough to say nice things about us, which, that went a long way toward her trusting us to help her. Okay. She didn't know us when this all started. And in fact, one of the nicest compliments anybody's ever paid me was Sally told me once. She said, the nicest thing my dad ever did for me was introducing me to you, Jerry. I thought, oh, that really was kind of nice.
That was a very nice compliment. She clearly
She doesn't know me.
doesn't know.
Right.
No, I'm just kidding. I'm glad I know you too. I wouldn't be here. Anyways.
That's true.
Well, so we have lots of happy campers for clients. But Sally is a great success story to share because now we're educating Sally's daughters with these pod classes. In fact, one of them was super excited when she heard the story about her mother when she listened to podcast number 3. Sally might be able to explain bits and pieces of the many things we do, but these pod classes and even the 20-minute video on our website go a long way in helping to explain things to your loved ones.
It's true. And for all of our clients who actually are crazy enough to trust us and let us help them, when we do appreciate that, would their family benefit from some of this information? Well, we think so. And it really is for 2 reasons. One, they'll probably inherit a lot of these assets down the road. So it's kind of nice for them to have some idea as to what to expect, what we've been doing for them. And number 2, they may benefit from all this information personally. And I mean, like right now. In other words, we have successful clients who can have successful families, and they benefit from some of this information now, not 20 years from now.
So again, this is an easy way to educate someone because, we're the ones doing the explaining. You don't have to explain anything. And obviously, their family needs a way to listen to these pod classes on either their phone or a computer, and they need to be willing to invest a little bit of time. But the benefit, the payoff of this is, I think it's mucho. There's a lot to learn here. Okay. So Sally's daughters have been telling everyone they know to listen to our pod classes, and they plan to send us some information to review for her and her husband. One of the daughters does. So we're excited about that. And it just goes to show you how just educating someone a little bit about something they might not know can just help them take that next step to improve their overall financial health.
Right. And it can be now. And so, that's what our clients, or not only, let's just say not only our clients, but also their family, what everybody has to gain by this. Now, if you're not yet a client, if you're in that category, we do invite you to listen to a number of these podcasts, and we try to make them as entertaining as we can, considering what we're talking about. And we suggest that you compare what we're suggesting to your current approach, or even to your current advisor. Now, at that point, we're happy to have a chat with you about your situation, talk about various things, answer your question, what you're trying to accomplish, and basically to see at some point, would working together, would that be a good fit? Would that make sense? Now, unfortunately, if somebody's not able to trust us enough to let us review their investments or maybe even offer a second opinion, you can put yourself in a situation like that where you're just doomed to keep doing the same thing you've been doing, which is a real shame.
It definitely is sad to think that somebody is going to keep doing something that's not the most beneficial for them. But you can't change everybody's minds. So these pod classes are about what has worked well for our clients. You don't have to look any further than the Wells Fargo research list called the DSIP list, which stands for Diversified Stock Income Plans, when we have seen what does well for our clients. So once again, it has a 30-year track record of 12%, per year, which is significantly higher than the S&P 500 index and has less volatility than the S&P 500 index. So to see for yourself, there's a performance summary for the DSIP list on the investments page of our website. Dad's mentioned it already, theorganizedinvestor.com.
And if it sounds like we're mentioning this and repeating this multiple times because we think it's important, that's exactly why we're doing this, okay? We're trying to make sure that this is sinking in, that this is a big deal. This is how we can materially, among other things, materially benefit and improve someone's long-term financial future. Now, if someone is so suspicious that they can't even believe that the 30-year track record is true, okay, here's an idea. I want to guess that most people do, and you as a listener probably have some forgotten, neglected, unloved account that you don't do much with. Maybe it's probably a 401k. It's still left at some company where you don't work at any longer. Maybe you worked there a zillion years ago, but you're no longer there. So even taking that account, even though the size of our average client household, it is in the hundreds of thousands of dollars. Do you realize that the minimum size for us to manage an account like this, it's like $50,000. And there's even circumstances where it might even be a little less than that based on certain situations, okay?
And the advisory fee to manage this type of account may be less than the internal cost buried inside of some of the mutual funds you already own, and maybe even less than some of the 401ks that fees that you've been ignoring. So if the performance of that neglected account has been less than great, we can explain how to bring it under our management, which is normally pretty simple. This could be a great trial run that would expose you to working with us, and you'll realize we're not as bad as you may think we are.
That's right. Some of those rumors probably aren't true.
Some of
Anyway,
them.
we're trying to keep our sense of humor, folks. So these are the types of accounts. These types of advisory accounts. They're completely liquid. So if sometime down the road you decide to do something else with it, that's fine. You can transfer it to some other location if you want. So that we're going to call this the getting to know us option with that account that you've kind of been ignoring, okay? And just like our clients who have families that can benefit from all this, you may have some as well. So invite them to turn their ears on and have a listen to what we're sharing here as well. Now, hey, we're really glad you joined us for this podcast number 13 and our little intermission episode, and to regroup and to remind you exactly what we're doing here and why. And Megan, before we get off this lucky, unlucky business, do you realize the old expression, you ever heard this, being unlucky or being superstitious is bad luck? One of my favorites.
That's definitely an oxymoron if I've ever heard one.
It is. It's a big moron.
Oh, man. So our absolutely most favorite part of these pod classes, I just get so excited about this, is getting to tell you that the rates of returns we have just shared are for informational purposes only, and that past performance is no guarantee of future results.
Megan, I bet it's the listener's favorite part too.
It probably is. I could just put it on repeat. So the returns for each of our client accounts can also vary based on the client's individual circumstances and, maybe such as when they started their account or what their investment objective was, et cetera, et cetera. There could be various reasons. These rates of returns for our advisory clients were compiled from a month-end performance report for each of the 190 accounts, respectively, and is way too much information to place on our website in an understandable way. So we spared our website from that. But in addition to covering the summary information with you here, we are happy to share all of this in either a face-to-face meeting at our office or maybe on a Zoom call, which might be more convenient for you. So the information...
Zoom. I'm sorry. I like to say Zoom.
Oh my God. The information exists and we are happy to share it with you. We just did not overload our website with it. So let us know if you want to see that information. And in other words, we have a lot of boring documentation to back all of these statistics up, and we're happy to cover it with anybody brave enough to go through it with us. Maybe you just need like a sleep aid, want us to read it to you.
Well, and a little self-degradation here. I mean, if you think these podcast episodes are boring, wait till we go through all the documentation with you. It's a crowd pleaser. So we feel these pod classes, and we call them pod classes because we're trying to help you learn things. They really are the most convenient way for a lot of people to learn things that they don't know, but maybe they need to know. So you're also welcome to join us for one of our live and even more fun live in-person workshops that we conduct. It's in the conference room down the hall in our building. And we're located in Landmark Center, which is right at the corner, the Paper Mill Road exit in West Knoxville near the interstate. That's where we are. So these little live person workshops, they last about 2 hours. We have a light meal, usually from Aubrey's right next door. There's no cost or obligation. You do have to show up if you're going to get something to eat. But however, seating is limited, so you need to make a reservation. And again, back to our website, the organizedinvestor.com. On the workshop page of that website, we have the dates, the times. There's even a little video that Megan put on there that kind of explains what we're going to talk about. And there's also a place there to reserve your seat. So we hope you join us there.
And we'd also say, please feel free to contact us with any questions that you may have. We are here. We are happy to talk on the phone or in person, whatever your questions are. We will hopefully get those answered for you. And also, be sure to follow us on social media, YouTube, LinkedIn, Twitter, and save us to your favorite PodCLASS player to receive reminders of future episodes. We would love for you to subscribe so that you get notifications that we have released new episodes. Also, we have more to share. So that means you have more to learn. So join us next time. As always, thanks for listening, and class is dismissed.
Dun, dun, dun.
The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of the Organized Investor or TN Wealth Management. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional investing advice. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning or before making any investment decision. And please consult legal or tax professionals for specific information regarding your individual situation. The Organized Investor cannot accept trade or account instructions on or through this platform. Please contact us directly at contactus@tnwealthmanagement.com or 865-415-2060 to place a trade or for trade or account-related questions. Brokerage and advisory services are provided by TN Wealth Management through Prospera Financial Services, Inc., member FINRA SIPC. The Organized Investor is a brand name operated by TN Wealth Management for educational platform purposes.